If we could just continue the conversation on the energy shock emanating from the Middle East due to the war between the U.S., Israel, and Iran. How is Ontario, Canada, feeling the ripple effects of that shock already? And how is it affecting your outlook as finance minister?
Well, great to be with you again. Great to be here in New York. You're in Washington. Great to see you. It has a double-edged effect. Clearly, you just heard that for Canada, we were a big oil-producing nation, big agriculture, fertilizer, potash, all those things, great. But we're feeling it in Ontario at the pumps. That's where we feel it. And it'll flow through to the supply chain if this persists. I think that's an impact. So mixed emotions about the price of oil right now.
Interesting. What is an average gallon of gas for you, Minister? We're at $4.17 today. Does that sound familiar?
Yeah, it is. I spent 2 decades of my life here in New York, so very familiar. Not that high. It's $1.70 a liter. I haven't quite figured out the conversion between liters and gallons, but we're roughly the same. We're roughly the same, and we feel the pinch at the pumps. We cut the gas tax in Ontario. We're a government that cuts taxes, so 4 years ago we cut the gas tax, so it's diminishing the impact somewhat. Over 10 cents a liter, but still, or the equivalent at the pumps in the U.S. in terms of gallons. But it affects the price of everything, and affordability is an issue.
Well, just like it is here in the United States, and an issue that, of course, has only sharpened due to the war with Iran, which, as we were just discussing with Mike, has seemingly reordered and perhaps structurally so global energy markets and energy producers like those in the Gulf states. And, of course, the energy production we have seen in the Middle East has empowered many of those GCC countries to have massive sovereign wealth funds that they can use to invest in other areas, be it technology or here in the United States or what have you. We learned yesterday, Minister, and you well know this, that Canada is now getting into the sovereign wealth fund game. This was announced by Prime Minister Mark Carney yesterday, giving essentially the Canada Strong Fund seeded with $18.4 billion from the federal government. What's your reaction? What's your role in this, if any?
Well, we have our own that we launched about 4 months ago, or a couple of months ago. So we're going in the same direction. If you think about what we're doing in Canada right now is major projects, big infrastructure. So that doesn't just mean a pipeline to the west to build more supply to markets in Asia, Southeast Asia, but also pipelines up through the north, through the Arctic, and east through Ontario. We import a lot of our oil from the Middle East in eastern Canada, and it gets refined in eastern Canada. We'd like to ship American and Canadian oil into those refineries. And of course, we're shipping a lot into the U.S. We're a big exporter of oil into the U.S. So we're your largest import market for energy. So this will help fund those major projects, tens of billions of capital required to do that.
Interesting. Looking at the size and scale, for instance, looking at Norway's fund, which is in the area of $2 trillion. You mentioned $18 billion. How much could this grow?
I think it could grow exponentially. And if you think about Canada, I mean, what we have up in Canada, your previous guest talked about oil and gas. We got an abundance of that.
Yeah.
We also have an abundance of agricultural products. He mentioned that as well. But I would add critical minerals, rare earths. We have all the minerals that the world needs for technology. And that's from a safety of supply, security of supply, and we have abundance of those minerals. So all these things, I think, are going to really add to not only the safety and security of the North American continent, I would add, but also from an economic prosperity point of view.
Well, and Minister, you mentioned Ontario's own version of this, the Protect Ontario Account Investment Fund. Have you found a private sector asset manager for that yet?
No, we're in the process of doing that. They're a couple months into the process, so hopefully conclude that shortly. But what that really is we have an incredible amount of entrepreneurs in Canada. We have tremendous support from U.S. investors and investors around the globe. We just want to make sure that Canadian investors, we have some of the largest pension funds in the world, are based in Toronto and in Canada, to put more of that capital to work in the growth areas. We mentioned energy. We're talking oil and gas, but Ontario has a massive footprint of nuclear energy. Over 50% of our province generates the electricity in Ontario. And by the way, I was in Midtown yesterday, and one company said, You're powering our building here from Ontario. So we ship electricity out of Ontario. We're also going to be big in defense industry. We're going from 2% of GDP to 5%, and on a Canadian $3 trillion economy, that's another 90 billion Canadian, or about 65, 70 billion US per annum. So a lot of growth opportunities, and that's part of our strategy with our version of the Wealth Fund.
Minister Bethlenfalvy, and I don't mean to interrupt, when you start increasing defense spending at a time like this in Canada, are you intentionally looking around the world for defense contractors to meet those needs? And by that, I mean looking away from U.S. contractors?
No, it's not either or. It's all of the above. I mean, the U.S. is our closest friend and ally and economic partner. Yeah, we're going to go through a negotiation on the USMCA deal with the Section 232s, but we're always going to have a very firm, long-standing economic relationship with the U.S., and that includes defense. I'm very confident of that. But, the president and others have said, you got to do more, and Canada's answering that challenge. So we're going to 5%. There'll be a lot of domestic, not just manufacturing, but drones and cyber technology. We've got to protect the North as well, the Arctic. So we're doing our share, and that's going to be a big growth industry for us in Canada.
Well, you mentioned the economic relationship between the U.S. and Canada, Minister, which, of course, has been rocked by President Trump's tariff policies ahead of what could be a renegotiation of the USMCA trade agreement. What is your understanding of the status of that right now, and what position Canada is bringing in terms of relative strength to those potential renegotiations, given everything that has gone on since President Trump came back into office?
Well, we're not only friends and allies and a long shared history together, but there's economic interests on both sides of the border. We're stronger together. I think we do some I'll do in Canadian dollars, $360 billion of trade a year, so $1 billion a day. 1.8 million Americans wake up every day to work on something that gets shipped to Ontario. And I think we're the number one or two, 26 states we're the number one or two trading partner. And if we were a country, we'd be in Ontario, the 20th largest. So there's economic interests on both sides of the border. We have a lot of natural resources up in Canada that the U.S. We trade with, and obviously the U.S. has a lot of attributes too for us to be able to sell into. So there's a lot of mutual commercial interest to, I think, get a deal done, and we'll work it out with our neighbors.
Mark Carney has said that Canada will not rush a tariff deal with the U.S. In our remaining moment, Minister, do you approve of that approach?
Yeah, I think we want to get a deal that's good for both sides. And I think there is a deal, but through any negotiations, there's pre-positioning and what have you. I'll be in Washington tomorrow meeting a number of people from Congress. The dialogue, the two-way flow of information is essential. So, look, I'm an optimist, and I think just by force of geography and nature, culture, language, all those things, we're gonna get through this together.